Hello everyone! Today I want to share something very important, the core trading framework and strategy for gold, silver, Bitcoin, and crude oil for the remaining decades of my life. It could be 20, 30, or 40 years, it all depends on my own fate. In these short videos, I will briefly share key points across 4 episodes, with more updates to come later. Eventually, I will compile and create a full-length video to explain everything in detail. Please follow my channel and stay tuned for future updates. When it comes to gold, we naturally cannot separate it from the US dollar and US Treasury bonds. These two factors currently determine the price of gold. When gold rises above $5,000, the total value of all mined and unmined gold exceeds $45 trillion. Historically, when this value limit is reached, gold enters a long-term correction. The correction can last 3 to 5 years, or a high-level sideways consolidation on the quarterly cycle for as long as 10 years. There are 3 major players: financial capital, industrial capital, and various investors in the market. Gold bottomed at $1,046 in December 2015 and experienced a 10-year bull run to $5,595. Financial capital had every reason to take profits. Otherwise, the sharp drop from $5,595 to $4,400 would not have happened. A 1,200-point move in just 3 days is not a move driven by small capital. At current gold prices, industrial capital involved in the physical gold business is certainly enjoying huge profits. Net profit margins are extremely high, up to 70% excluding resource taxes and other fees. They have every reason to hedge at high levels and lock in future profits. This will be the main bearish force for gold in the coming years. Of course, gold will not crash immediately. It will trend lower with volatility for several years. On the monthly time frame, gold has 2 key zones. The first is 3,890–4,390, and the second is 3,280–3,450. Based on my current knowledge and technical analysis, I lean toward a correction to the second zone, 3,280–3,450. The most important reason is that for gold to enter its next major uptrend, it needs price room to eventually challenge 9,500–11,000 and open a new 5-digit chapter for gold prices. This process may take a long time, but I should live to see it in my lifetime. Is this analysis helpful for my trading? The answer is definitely yes. At the very least, it tells me when to go long or short. For now, my main position on gold is short. When prices pull back sharply and form a rebound structure on the 30-minute or higher time frame, I will take small long positions for hedging. This is a strategy, a real trading strategy. What is a strategy? It is a big picture direction and overall plan. Those who only focus on small cycle charts or short-term candlestick patterns are at most speculating. When your win rate is not high enough, you are destined to be eliminated by the market. In the end, trading is about the person, not just technical tools. Technology is only a supporting ability or instrument. Once you can step beyond technical analysis and view the market from another perspective, you will see things very differently.